All right, good evening, everyone. I'd like to welcome you to Tuesday, October the 23rd, Hurley Investments Financial Commentary. Going to save this to make sure we have it at the right one. There we go. I've got a couple things I want to talk about tonight, but I'm going to start off with my email I was willing to send out to my clientele. And I ended up writing this way late. Wrote it at 2 in the morning. In fact, let me tell you, when did this get sent out? 1:30 in the morning is when I sent this out. So it's kind of funny because the question is, well, do you, how do I say this? How important is doing what you do in the market? Is it a full-time job? Is it a more than full-time job? There are plenty that just take your money and they let it sit. And then there are plenty that are worrying about what I should have written 3 weeks ago. What I wrote out was hello. So yet is late in the evening or early in the morning, depending on how you look at it. And that's what I'm going to get at. I'm going to get at a perspective in the last 3 weeks we've had in the market. I'm officially 23 days late on getting out a monthly update to you. I have had thousands of ideas from countless hours of research float through my brain. Yes, I agree our markets are going crazy right now. I'm sure that why I've been constantly asked, crazy now. I'm sure that's why I've been constantly asked for the last 4 weeks, Kevin, what the heck is going on? I've read articles from Barron's, Bloomberg, and Reuters that say they don't have a clue. So it'd be foolish of me to write an update explaining our markets to you, acting as if I knew something the greatest economists, financial analysts, and the Fed policymakers don't know themselves. Here's what I do know. We have some problems in our market right now. It may be rising interest rates, the slowing of home purchases, China trade war, Trump and his ideas, Democrats in general. I thought that was funny in parentheses. A mob marching to the U.S. borders, a wall, no wall, the rising dollar, tariffs, a market 5.5 years overdue for a correction, the impossible comps to beat next year due to the tax cuts, slowing world economy, deficits, Brexit, emerging markets getting destroyed this year, midterm elections. Anything else we could put in there? Is there anything else you could see that I have missed that we can put in there? What else could I have put in there? I mean, I know that's kind of a comprehensive list. Geopolitical. Mod, perfect one. So I could say geopolitical. Come on, Hurley. News/events. What else could I have put in there? Anything you think I missed? Or you think that's a pretty it seems like a pretty full list. I'll be honest with you. Pretty good. Anyone else? Anything that you think I missed? Cats and dogs sleeping together. I like that one. Rate selling home purchases, China trade war, Trump ideas. I could say higher volatility. I left out rising commodity prices. But, I'd say that's pretty good too. So let me keep going. Yes, everything plays a part in the market moving. And here's what I can tell you. It would be foolish to think that if one domino falls, all the others can't fall as well. I don't want to cry wolf. Tomorrow or this week will probably bring the S&P index into negative territory for the year. We came, I think it was 0.41% away from it today. We're looking to open tomorrow down big, and things should really get ugly before they start to get better. If all the dominoes listed start to fall, then the bottom is a long way down, and mathematically, it'll be twice as bad as 2008. I then go through some of the protection, but and I guess why we do what we do. So here's my question for you today. For those of you that happen to be in front of the market, what did you think of today? And if you weren't in front of the market, then it's not fair to ask the question. But what were your thoughts when you saw the market today? David says this one's going to suck. Maybe. What were your thoughts in the market, though? Where did it all come down to? All the gains, or a lot of the gains from 2018, are gone. Mon also put Italy in there. I forgot the pigs, right? Could have been the pigs. Italy, though, seems like they've been bailed out. But yes, that could have been one. Grind up slowly, fall quickly. Another great comment. Interesting comment. A little too late to protect. So, Gary, why would you say a little bit too late to protect? That's an interesting question, Gary, because, again, there are times when if you didn't throw something on, you were really in trouble. Why would you think it's a little late to protect? Give Gary a second here. In fact, I think, do we have two Garys here? We have two Garys here. So we got Gary Solomon and Gary Peters. So let's go Gary P. There you go. It's a little too late to protect because the drop's already in and it's very expensive. So there's your question. Your question is the protection, if you've already missed a big chunk of the drop, worth it, right? Is a big chunk or a big part of the drop, if it already comes in before the market opens, is it worth it to add that extra protection? And that's, in all honesty, that's one of the most difficult parts of my job. The difficult part of, in all honesty, managing people's money, can you explain what you're doing? And really it comes down to nothing more than, are you right? You've got to be right. If you were to look at a chart today, which means I better put them in. If you're going to look at a chart today, We're bringing in the Dow. Man, what an ugly morning. What do you see in the chart if you look at the Dow? What do you see in the chart if you look at the Dow? That's right. You're right. At some point today, we broke the 200-day simple moving average. And we didn't break it barely. We broke it convincingly. 25,158, and we went down to 24,800 plus. We were down even below that. So we were down 28.3, 360 some odd points, 70 points below the 200-day moving average. Very interesting. We finished above it by, 33 points. Scary day in the Dow. We're obviously bearish. And if you want to be a trend guy, right? That's the trend I see. If you're going to draw trend lines, we definitely can see the Dow down at that 24,600 to 24,400 level. It's a pretty standard short-term downward trend. In fact, it's pretty interesting because I would tell you most corrections, a 10% drop, look like that over a 6-week period of time, which we're almost at. Doesn't mean we are going to go down farther. It just means it doesn't look good. If I bring in the S&P, very similar, but maybe even more pronounced, except for the fact today we broke the 200 and we did not recover. And a rough look at 2640 to the downside, which is funny because it coincides with our April-May lows. You could even say 2620. Maybe we'll get an oversold bounce. Don't know. If we put the NASDAQ in here, look how similar this looks. I'd probably have to go down here. And I know that's not a perfectly straight line. But again, 7,100 is our downside. Anyone think that's out of character, out of sorts? Maybe I'm wrong. Could I be? I definitely could be wrong. But dropping from 8,000 down to 7,300, that's almost a full 10%. If you asked me where we're going to start this month, I thought we'd be up 1.5%. Yeah, we're down 7% plus right now, but I'm only saying 2. I'm saying earnings can move us out of the position we're in. But I'm not sure what our position is that we are in right now. We had a remarkable bounce higher in our market. But I'm going to be honest with you, I'm a little confused. I'm confused when it's always a buying opportunity from the TV pundits, right? I'm confused when financials are supposed to be the best sector in a rising interest rate environment. Yet they seem to forget that last year at this time, before 1% interest rate hike, they were saying the same thing. And I agree with them. I think in an interest rate hike environment, you should see financials do fabulous. You should see Bank of America, Citigroup, Morgan Stanley, they all should be doing better. And they're not. Zions Bank gave a perfect earnings report. And they were beaten up. I'm confused that you have to have the perfect, quote unquote, earnings / guidance and still are punished for doing so. I'm confused at how irrational the stock market can be, so I protect where I can. And the worst part about it, for those of you that ever thought, you know what, Kevin, I like doing what you're doing. Every up day is a day off for you in the stock market, which is true. Any up day in the stock market is a day off for me. Doesn't mean I don't spend time finding new business. Doesn't mean I don't spend time going over positions, trying to find new positions, soaking in what I see off the TV when it comes to Bloomberg, Fox, and CNBC. When one has a commercial, I just click to the next one. I rotate through all three. It doesn't mean, though, that the job is easy. Every day, I have to be willing to answer to my clientele on why I'm doing something, whether it's right or wrong, or what caused me to act that way. And then monthly, I've got to go justify it to the Securities and Exchange because I'm a small state-regulated RIA. I tell you, though, a lot of people are ridiculously upside down, and they've got nothing to show for it. And I'm not saying that I'm profitable in all the clients' accounts, because I'm not. But every client, let's put it this way, every client that I manage money for should have had some kind of new shares added or will have new shares added here shortly. Some of that downside movement, I should be able to make up for them. And I should be able to make up for them because it is my full-time job. My full-time job is watching the market so you don't have to. My full-time job is making a decision that not only does it have to work for you, but that it has to work for the money I have in the market because I can't do anything that I'm not doing for you. If I'm getting in, you got to be able to get in. If I'm getting out, you got to be able to get out. This week, I went to this week. This week, 446 S&P 500 companies report. A third of the Dow Jones Industrial Average report. So you'll notice I don't have a whole bunch listed here for earnings because I could put a ton in. What I end up doing is I go to this week and I'll go to Monday and I'll take a peek and I'll say, all right, I'm probably going to pay attention, or it might matter for me. I'm going to take a look at Halliburton. I'm going to take a look at Hasbro. Toys, right? I'm going to look at Kimberly-Clark because it's important. It's a well-known name. I'm going to go through. I could say Phillips, but it's going to be a busy week, which means if I'm writing all these down, am I going to do the research to find out, hey, Halliburton came in at 50, they were 49, they went down. Hey, Hasbro, horrible. Toys are looking horrible. Missed it by 30 cents, down 12.4% year over year. What was the other one I said? Kimberly-Clark, $1.71, down 1.8% year over year on revenue. Mixed bag. I don't just write a bunch of these down. I try to get a sense of where our market is going, and I will also try to match closely to some of the stocks that I trade. We had Zions Bank handily beat on Monday. 104 versus an estimate of 88 cents. Year over year, beat by 42%. I want their financial statements. I want to see their earnings call. Oh, that's TD Ameritrade. I'm sorry. I obviously should research it. But that's how I looked at Mondays. Tuesdays was even worse. If I go back, we had everyone report Tuesday and Wednesday. So in a busy week like this week, I'm going to go to Tuesday. 3M and Caterpillar, kind of easy to pick those off. They were also the problems today. But both of them said, hey, things are getting more expensive. Commodities are costing more. Well, Kevin, you're just saying you'd go to those two because they were an issue today. No, I would go to those two because I also trade Freeport-McMoRan that should report on Wednesday. And so I'm going to pay attention to companies that would use what Freeport-McMoRan what they would how it might affect those three, 3M and Caterpillar, to see how I might do with a materials company. I had written down wow, then I go for a while. I normally would look at Fifth Third or FCB Financial Corp. I missed those. I did have Corning listed down that I would look at their earnings. JetBlue because I fly them. Lockheed Martin because I have Red Hat. That also means I'm going to look at Raytheon this week. Pulte Group because I've traded the home sales. They've been beat to hell. Maybe it's time to get into the home sales. I would look at Verizon because I used to be in Verizon, got called out at 55. Which is funny because I thought I heard today they're at all-time highs, and that's at 57.21. So, yeah, they're above that 55. Ugly looking chart over time for these guys, but pretty interesting. I've got some more written down here. Does that mean I'm going to miss like Xerox, TransUnion? I am. Some of these aren't going to be important to me. I did have McDonald's down, but that's not really important to what I trade. What else do we have here on Tuesday? COF, Capital One, because I'm looking at banks. My Bank of America and Zions Bank. Noodles reports, but it's really not important to me. Juniper reports, so I'd pay attention to Juniper. Might give me a little insight on what some of the more technology ones will do. And I put Valmont because I've traded them in the past. That's all I would be looking at for Tuesday. Wednesday is one of my biggest days from earnings. Things that I'm actually just not going to write down, but I'm going to pay attention to on the 24th. I've got 3 of my companies that I trade that I'd watch. I'd watch AT&T because it's a high dividend payer to see if it might go higher. I'm also trying to get into Sprint. Going to see if they make Sprint more attractive. Boeing again because of FCX, how they use the metals to purchase their planes and build their planes with. I would be looking at my sheet here. Boeing, I guess because I've traded them in the past. Boston Scientific because I hear their name a lot on TV. I've got obviously Freeport-McMoRan, FCX there. General Dynamics I'd pay attention to. As I'm going through, I don't have Owens Corning, Consumer Staples, UPS I'd pay attention to see if they would give any interesting insights into how we might be shaping up for the holiday season. After the market closes, I've got Ford and Visa in there because I trade those. And Tesla reports, Love reports of that Southwest. Chipotle Group, Discover Financial Services. I'd follow those because I trade Visa. Also, First Solar, because I used to trade them in the past. It's not one I'd be trading anytime soon. Thursday reporting, a little bit different. Still kind of busy. But Thursday, I would come down, I'd look at my Thursday, and I have Alaska Air because I've been called out from those guys. Maybe I'm going to get back in. Altria because I trade those guys. American Airlines because they're popular. Bristol Myers because they're popular. Celgene because they're popular. CME Group because they're popular. ConocoPhillips because I might get back into those guys again. COP, excuse me. First Bank Corp because I'm into the banks. Merck because they're popular. Newmont Energy because I might get into them or Dominion. Raytheon because it's the Ray Hat, Lockheed Martin type of position. UNP because of the railroad systems, and that's a Trump one. A Buffett stock, just trying to pay attention. Union Pacific. Amazon reports, Twitter reports, Waste Management reports, Valero reports, Baidu reports. Obviously, I trade Baidu. And then Friday, things really start to calm down. There are some earnings, but it doesn't mean I'm going to follow all of them on Friday. In fact, Friday I only have 2. Colgate-Palmolive because they're important, and Phillips 66 because I'm looking at where I might get into the oils or the energies to fight off a first quarter or second quarter of next year. And all the rest aren't important to me. I'm just trying to find companies and industries that I have stocks that I trade in, and I would go through, and obviously I will go through this later, and I will fill those earnings in because any earnings I write down are earnings I'm going to pay attention to. By way of economic reports, this week we only have the housing, which we know is not doing so well. Higher interest rates makes for a lower home price and lower home price to make your home more attractive and less opportunity for people to be excited to go buy a home since it's 1% or a third higher in interest than it was a year ago. GDP numbers on Friday, which actually should be pretty good. If you ask me how am I looking to trade, I protect my stock positions for earnings, and I'm already there. And I'm reading up a ton. I read all kinds of stuff. Market correction, buying opportunity, or time to sell. Pretty interesting opinion from this gentleman. If I remember right, oh yeah, this is a huge one. I love everything this guy looked at. He gave all kinds of charts and what about this, what about that. The short answer is it's a buying opportunity. And it's interesting because I showed this part pretty not too long ago. And if you start to draw your lines, we're awfully close to possibly hitting a recession. Go back 3 or 4 weeks and you'll find out on this one. But kind of need to see these use some charts. A lot of information. Lot of charts in here that make you look at things in a different line. And the short answer is things are getting frothy. We're going to be near to a top than we are a bottom. And some really good information to look over. A little bit on Ford. Understanding better what they're doing. Yes, it's one of my losers of the year, but I'm still in Ford. I still have a ton of shares myself. I think they're a good company that will not be going out of business anytime soon. Apple Store ads could be a $2 $2 billion business by 2020. One of the Bernstein bulls on Apple found another source of money for for Apple. You kind of want to sit there, you want to go, duh, but pretty interesting to see another source of revenue for Apple. Very interesting article about here's what Wall Street isn't paying attention to from the Fed. And the fact of the matter is we haven't taken into consideration, or for the most part, the market is priced in where our interest rate hikes are this year, but we seem to have missed the three that are coming into next year. And those are the three that will probably derail our market and finally send us into our correction. And then a comment that the Feds are probably already winning the war against inflation, or maybe that they don't need to be raising hikes as fast as they have been. So with that said, that's kind of where I'm at tonight. Just sharing with you my thoughts. I think it would be foolish not to be protected on each individual stock. And in all honesty, I think that no matter how good those earnings are, it just might not matter. It just plain and simple might not matter this earnings season around. Any questions you guys have that I can try to answer for you today? Any questions you have that I can try to answer for you today? So if I'm going to make one other comment, there are some stocks that I think are good buys right now. In fact, a lot of what I trade I think is a good buy. I got a chance to buy Visa $10 cheaper, about 7%. Baidu 35% cheaper-ish. Ford ridiculously cheap. Under Armour ridiculously cheap. Zions Bank great earnings down 30%, ridiculously cheap. Bank of America back down 27 and change, has at least a movement up to $32 in it. There are some stocks that look very attractive. It does not mean that they're going to be rewarded by the market for earnings, but there are some very attractive stocks that seem to be out there right now. All right. Well, hey, I don't see any questions coming in. With that said, guys, have a good evening. I do hope this was helpful to see sometimes you don't have to have all the answers. Sometimes it just doesn't work that way. But you do have to be ready to protect. And I think we're looking pretty good at being able to get through this with the protection that's already in place. I do think we have a Christmas rally in store, and then I think the bottom's going to fall out. I will be protecting when we see the end of the Christmas rally into the first quarter of next year because of the uncertainty. Guys, have a great evening. Pleasure being with you tonight. I'm trying to delay to see if any other questions come in. If not, y'all have a wonderful evening, and I will look forward to talking with you next Tuesday. Have a good night, guys. Bye-bye.